Newman, Brian Wilson, Mary Catherine Ham, today's newsmakers, and you, the Morning Majority. 105.9 FM, AM 630. WMAL.
8:37. You know, last week was not a particularly good week if you had money in stocks. I mean, the worst weekly performance for stocks since October of 2008. Down on average 5% for the week. The Dow was down 738 points for the week. S&P down 80 points. NASDAQ down 139 points. Very depressing. The European banking crisis is threatening the world economy, according to Tim Geithner. And we're all worried about Greek default. And on those cheery notes, we turn now to Tobin Smith, the CEO of the NBT Equity Group. You can go and learn more about that at nbtequitygroup.com. He is also, of course, a Fox News contributor, an all-around good guy who's with us now on the phone. Do we have any hope that we may see a turnaround this week, Tobin?
Well, let's not think in weeks, Brian, and thank you for that warm and glowing introduction. I'd say the biggest issue we have in stocks right now in the United States is the good news, bad news thing. The bad news is that investors have pulled out about $92 billion out of the stock market funds over the last 3 months, actually another $25 billion in the first 3 weeks of September. So let's call it, for argument's sake, about $120 billion.
All right.
Well, they didn't put $120 billion in after, the bottom of 2009. So that basically says that the person who's self-directing their mutual fund has been either redeeming funds or just, going to cash. Our forecast, based on the survey we've done for 15 years into 26,000 businesses, is that we are in going to have a pretty light recession, but we are going to have a recession here, and that's what the market has basically been discounting. The market had been priced with the idea that we were going to have 2.5%, 3% growth in the fourth quarter. Well, that ain't going to happen. So this process is the repricing. The good news is unfortunately, Joe and Mary, mutual fund owner, normally pull their money out near or at the bottoms of these, of these movements, of these cycles. And so I would suggest to you that with stocks at these very low valuations, in other words, as a multiple of their earnings, we're not in a bear market where people have overpaid for stocks and they need to be corrected out. They've already been corrected.
Mm-hmm.
Those prices have already been priced in. So we're looking for a mild recession, and we're going to have, this mild sort of bear market here. If you haven't made much of a move yet here to, build cash or bonds, whatever, it's really pretty too late.
How long do you think this light, mild recession will last?
Well, here's what we get. You have all of the headwinds that we've headed into. Plus, let's not forget, I don't know if you guys are aware of this, we're actually moving into an election year.
Yeah, I've noticed that, yeah.
I heard something about it, yeah.
Yeah, and so what happens, unfortunately, in this one, because obviously, one side is from Venus, the other side is Mars, they're going to be constantly beating the crap out of each other. That's a very scientific term.
Right.
And that doesn't really make people feel good about what's going on when all they hear, from both sides is both sides have no idea what they're doing and their total income poops. That doesn't really build a, let's put money into stocks fever, you know what I mean?
Yeah.
So that's going to pervade, I think, and then it also becomes sort of somewhat self-fulfilling. I don't know if we could just, spread Valium into the water, which would be probably my best suggestion, because in essence, you have bad news, you sort of hunker down, if you will. When you hunker down, other people hunker down because you hunker down, and, it becomes somewhat self-fulfilling.
Well, here's what I was thinking, Tobin, though. You have, every year or every few months, and the number gets bigger. We said there was like $1 trillion on the sidelines. Now some people are saying there's $2 trillion on the sidelines. Consumers are still hoarding cash, and they're saving money. So everybody's waiting and waiting and waiting and waiting. What's going to be to either to pull the trigger to get people to spending money again and to get business to start spending money again and start hiring people. They're all waiting. Yeah. They're all waiting for the 2012 election. But I guess my question is, can the economy wait that long until November of 2012?
Yeah, I mean, the question is, what's the catalyst to get people to action? And normally, in recessions, the catalyst is that that basically the life goes on. Remember, we have a $15 trillion economy, including inflation. It's not going to a $13 trillion economy. It's going to a 14.900 billion. So what happens is stuff gets used up. You have delayed consumption, and at some point, you really do need to replace that and do this and so on and so forth, and that sort of starts the trigger. Then the other side is just a sentiment move that companies have not shut down, businesses have not shut down. Unfortunately, the biggest issue we have in the economy that nobody talks about is that companies have fought these food price type inflation things and the commodity inflation things with a higher productivity. And higher productivity means I'm going to get more out of the people that I have than I do now. Mm-hmm. That's been the secret sauce of keeping earnings there. And what companies have learned is that they have not hit the point where they need to, really rehire to meet demand. And so that's why we're stagnant. But productivity, is a two-edged sword. It's great for, your earnings and your gross margins, but it also says that they've learned to do more with less, investing in technology, et cetera. So that's why I don't think the catalyst of job creation hits. I really think that the catalyst probably comes next year when there's a president, a Congress, and a Senate that are all on one side, and they decide to pull the trigger on growth-oriented legislation and a growth-oriented economy and make it, again, so it's not bad to be a capitalist, but it's not bad to be a business person. I really think that, and you're going to see stocks go somewhat along how you see the forecast and the polls as we get near the end of the year.
All right.
It looks like Republicans will win. It'll be good for stock.
So we have to wait till 2012 before things really start getting rolling.
You're gonna have highs and lows. We're in a trading range. So call it 10,000 at the bottom. Call it 11,500 at the top. That's what we have for the next 8 to 10 months.
All right. Tobin Smith, who's the CEO of the MBT Equity Group and a contributor to the Fox News Channel and Fox Business Network.
Thanks, Tobin.